Craig, thank you for joining us.
Thank you, Ruth.
Brexit drags on. How is that affecting IPOs? How is that affecting London's appeal as a market? Are more companies looking at, say, Amsterdam or Frankfurt now?
We have a pretty full pipeline of transactions. London remains an attractive venue for IPOs. We're going to have to see what the final outcome of negotiations between Britain and the EU are going to be before we know whether Brexit is going to affect the deal pipeline. But for now, I think most of the effect of the EU referendum result has been felt through the currency markets and not through the equity markets. I'd also add that many of the companies we IPO are global companies anyway. They may be headquartered in the UK, but they have global operations. And so therefore, the effect of any kind of economic downturn in the UK would be minimized.
And one of the things that we've been talking about a lot today is M&A, with the merger announced in the US of CVS Aetna. Last year we saw with Bayer Monsanto there was a huge equity financing element. What are you seeing in terms of investor appetite for equity financing on M&A this year?
Generally speaking, investors are pretty well disposed towards financing acquisitions. 5 or 7 years ago, investors really wanted companies to strengthen their balance sheet and restore themselves to financial health. Today, investors are much more prepared to support companies buying other companies, M&A in a variety of different formats, and they're prepared to follow their money.